All right, guys, welcome back. This is Trade with Ola, and this is the fourth video on Malaysian SNR simplified. Okay, so we are getting to the most interesting part of the Malaysian SNR, and sometimes can be like the most difficult part for a lot of beginners who are trying to understand the Malaysian SNR concept. Okay, so for those of us just joining for the first time, and probably you don't understand what we're about to talk about or what I've just been saying, I would advise you go watch the first video, the second video, and the third video so you can understand where we are right now and you can be able to understand certain things in this video. Peradventure, you already have knowledge on Malaysian SNR. That's all good. You can stick with us and watch this video. All right, let's go straight to it. So for the past three videos, we're just going to have a quick review. And we are talking about something very important today, which is one of the bedrocks to every trader out there because this particular concept is required every day. A trader comes into the financial market probably look for an opportunity to capitalize off the financial market. Okay, so let's go straight to it. Now we're going to be talking about storylines. Storylines in Malaysian SNL. Now, please don't get confused. When we talk about storyline, we're all just talking about directional bias. For smart money concept traders, they call it directional bias. For ICT, it can be your outlook, it can be your direction of the market, you understand, or the next draw on liquidity, whatever you want to call it. It is just telling you the possible next direction the market is about to head to. So you have to look at two key things while you're trading the financial market. Okay, you want to see where market is coming from or where market is reacting from, and where possibly market is heading to. You will never hear me use the word where market is heading to. No, possibly. Okay, because it is not 100%, but based on the edge or the concept we've traded, which we've back tested, and we can see off our records that okay, this particular scenario or system repeats itself. Okay, we now know that okay, possibly this price after doing this certain type of reaction or giving us this certain type of pattern can possibly print out this movement or possibly move in this particular direction we're looking out for. Okay? So now, when we talk about Malaysian SNR, we're talking about storyline. Storyline is very straightforward, very beautiful. It's just also looking out for possible directional bias of the market. Okay, so we're looking for where price could possibly get to, where price is reacting from, and where price can possibly head to. Okay, that's what we mean by the storyline in Malaysian SNR. It is just you understanding the directional bias of the market. So I'm going to do something here. Let me take this up a little bit. Beautiful. Now, how do we understand our storyline in Malaysian SNR? Let's say peradventure we have two levels here. And for those of us who have watched the first, second, and third video, you already know that okay, this is a key level for us, and this is also a key level for us, right? Beautiful. So this is an A-shaped classic level, and this is a V-shaped classic level for us, right? Beautiful. Now we know that whenever price gets to this particular level, there's always some sort of reaction if this level is fresh based on certain criteria that oh this level is fresh, it has certain things, there's always what some sort of reaction or there's a high chance there will be a reaction at that level. Okay, right? Beautiful. So now let's say we want to look out for our storyline or directional bias as a trader. I don't think you should be looking out for a directional bias or possible direction of where you want where the market might be heading to for you on lower time frames. Okay, it's not realistic enough. Okay, you would definitely get confused, or probably if you're a scalper, you could actually do that. Okay, but let's say you're a day trader or you're a swing trader, you definitely want to go to the higher time frame to understand the direction of the market for a long period of time. Okay, so that you can stick to such direction and trade in line with such direction. Right? Beautiful. So let's take these two key levels to be on the daily time frame. All right, guys. So we're going to take these two key levels here. I want them to be on the daily time frame. So you can see D1. So this is D1 time frame, and this is also D1 time frame. Okay. So they are both on the daily time frame. So we spot out these two key levels on the daily time frame. So let's start with the V-shaped classic level, which is a level that can help us create resistance, right? Beautiful. So now price gets to, let's say price starts from here, price started moving from somewhere around here, creating lower lows, lower highs, 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 down to our key level. Then price gets to our key level. Boom. Now, when price gets to our key level, what are the necessary criteria we need to look out for? Or what are the necessary functions we need to look out for in the market? The first thing we want to see is we remain on the daily time frame. We want to see a daily candle reject the daily candle. What do I mean by a daily candle reject the daily candle? Popularly, you hear Malaysian SNR traders saying daily reject daily. That is what they mean. So it is just a daily candle rejecting a key level, a daily key level. So let's say you see you spot out your key level. This is our V-shaped key level right here, right? And price gets to that your key level and then gives a reaction. What type of reaction are we looking for? We're looking for this type of reaction. You can see how this candle, this is a daily candle. Let's call this a daily candle because we're looking at what key level on the daily time frame. So whatever time frame you're using to spot out your directional bias or storyline, you must see that reaction. You must see this reaction on that same time frame. So when price got to this level here, I would still be on the daily time frame and waiting for that daily candle to what wick that key level and reject off it. You can see that this candle printed itself down like this for some period of time and then rejected off it and closed this way. This is a clear rejection of this key level. That is the first criteria. Okay, that is the first rule while you're spotting out your storyline. You want to see what your price react off your what your key level of that same time frame. So this is daily rejecting what daily. Okay, so this is daily rejecting daily. So this daily candle rejected off this daily key level. Okay, so we call that what daily rejecting what daily. I hope you understand this. All right. So now after looking at daily rejecting daily, we need to understand certain things. So I'm going to state out the rules here so that we don't get too confused. So the first rule is daily must what? D1 must what? Reject. Sorry, reject D1. So daily must reject daily. So that's our first rule. That's if you are looking for your storyline on the daily time frame. Then secondly, you must see price. You must scale down to the 4 hours, which is one time lower. You scale down to the 4 hours and then wait for a breakout. Okay, and wait for a breakout. Okay, now the first criteria was daily has to reject daily. Beautiful. We've seen that here. Then we scale down to our 4 hour time frame to look out for what? A breakout. Now, what is a breakout? What is this breakout we're talking about? Now, you see price gets to your key level and then we confirm that daily has rejected what? Daily. Good. This daily candle close this way. Now, when you scale down to your 4 hours, what you want to see is price take out the previous A-shaped key level. Now, mind you, a lot of people are going to make mistakes here, and this is where a lot of beginners make their mistakes a lot. Mind you, this particular move here, you can see that after price created this lower high, it tapped this key level, then immediately rejected from this key level and swept what the previous what lower high. This is what our breakout. Okay, this is our breakout. Now, please don't get confused. There are certain things I'm going to show you guys here now. So let's say peradventure we have an example like this. Lower low, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Tap my key level, created another lower low, and then lower high, sorry, and then tap the key level again and then pushed up. Where is your breakout? Some newbies or some people will say, oh, this is our market structure shift, or this is my breakout, or this is my change of character. Please, you are wrong. Why do I say you are wrong? Because this breakout you marked here, price has already tapped the key level before creating this high. Where you want to be looking out for your breakouts or your market structure shift is a high that was created before price what tapped this key level. So a high that was created before what price taps what that key level. That is your valid breakout, guys. So please take that. It's very, very essential. It is a very key concept. So you can see the difference between these two. This high was created before price tapped on this key level. But this one created what? It created a high before tapping this key level, then created another high for you guys to confuse you. And some people say, okay, this is their market structure shift or this is their breakout. You are wrong. Price has not actually shifted structure or giving you a market structure shift or a breakout yet. Until it takes a high, a previous high that was created before price touched your key level. Okay, so that is what we call what? A breakout or a market structure shift or a change of character. When you hear me talking about breakouts, I'm talking about market structure shift, I'm talking about change of character. Okay, so don't get confused. Beautiful. Now, we said the first criteria was what daily has to reject daily. Beautiful. The second criteria is we wait for a breakout. And what is that breakout? What are the criteria for that breakout? We scale to the 4 hours. For daily, we scale to the 4 hours to check out for what's our breakout. Are we there? So this is for daily. This is for finding your storyline on the daily. Now, we could also find our storyline for the 4 hour candle, even for the weekly. But I always don't advise. The two higher time frames I always work with is I always work with the weekly. So let's say this is week, this is 1 week. So we're going to look at weekly rejects weekly. So just the same process. Weekly rejects weekly, and then we scale down to what the daily time frame to spot out what to spot out a breakout. Okay. So I also have traders that also do it for what the 4 hours. Yes, you can actually use the 4 hours, but that should be the least time frame you should use for spotting out your directional bias or your storyline, because the 4 hour storyline is going to be a very short storyline. Okay, it might even be just a day. The storyline might just take a day, but the daily storyline or the weekly storyline can take days. Are we there? Can take days, can even take weeks. So people go as far as using the monthly storyline. Okay, but I don't do that. I don't really need to go that far. Okay, so we have the 4 hour, reject the 4 hour. Okay, and then you scale to what your 1 hour time frame and wait for a breakout. Okay, so these are the rules you should follow if you're looking out for your storyline. Okay, now this storyline helps you to understand the direction of the markets for some certain period of time and helps you as a trader to know, okay, I'm coming into the market. What is my storyline? What is the direction of the market? Okay, I'm looking for buys. I'm looking for buys. I'm looking for buys. I am looking for buys. Don't change your bias. You see a lot of traders this morning, they're looking for buys. In the afternoon, they're looking for sales. In the evening, they're looking for another buy. You see a trader, he wakes up today, oh, I'm looking for a buy. Oh, tomorrow I'm looking for a sell. But when you talk about directional bias, when you talk about the storyline just tells you the direction of the market for a certain duration of time, a certain duration of time. So you see me sometimes for some week or for some weeks or for a week, you just see me looking for buys on a specific pair. I tell you, oh, I'm bullish on this pair, and I'm looking for buys on that pair. That is the importance of storyline. It keeps you in check. It removes the whole confusion of you looking whether you're to buy today, you're to sell today, and all. Unless probably your storyline is about to end and a new storyline is about to start. Are we there? All right. So, guys, let's look for live examples on the chart. Let's understand these live examples on the chart. So, but before then, let me explain the same process we have here. You can see then we now have, let me remove this. Okay. So, I believe we understand how we got our breakout here. Beautiful. Now, let's say now we now have price give us what? A breakout. The moment we see this breakout on the needed time frame, which is for the daily, we have to see a 4 hour breakout. So this has to be what? A 4 hour was breakout. The moment we see this breakout, beautiful, we start to look for what? Buys. We start to look for buys opportunity. We start to trade our strategy and looking for what? Buys, buys, buys to the next key level, to the next key level. So let's say our next key level is this up key level we have here, this A-shaped key level. So till price gets to this key level here, we continue to look for buys till we get to the next key level. Okay. So the truth of the whole system is this: price moves from one key level to another key level, from one key level to another key level, react from one key level to another key level. That's how price moves. Okay, so I'm going to show you guys a very good example on the live chart now. Okay, so let's get to the live chart for that. So sorry guys, let me just lock all this. Okay, so that we can have them later. Okay, beautiful. Now let's come to our live charts. So I'm going to be using XAUSD for an example. Okay, so I'm on the daily time frame, right? Beautiful. Now I'm going to show you guys something, how I was able to look out for just sales in the market for a specific period of time. Now I'm on the daily time frame. I want you guys to take note of something. I came to the daily time frame when price was around here. Let me show you guys. Let's replay this. Okay, beautiful. So let's replay to this point here. Yes, to this point here. All right. So after this down spike to the downside here, obviously price obviously reacted off a key level here. I think it was around here. Yes, price obviously reacted off this A-shaped key level here and has been dishing to the upside. Okay. So when I saw this A-shaped key level, let me show you guys. You can see there's an A-shaped key level there. Beautiful. Now price reacted to this A-shaped key level and then started dishing to the upside. And then you can see people, you start to look for what buys, buys, buys. But you have to take note of what essential key levels, something like this key level here, this key level here. Now, this key level is not that fresh. It's not fresh. So I'm not really going to focus on that, but this one here is fresh. Now, I've spoken about fresh and unfresh levels, so you should understand what I'm talking about here. So this is a fresh key level. Now, what is this type of key level here? This was what a support that turned into what a resistance. And you can see when price got to that key level, watch something here. The daily candle got to that key level, rejected of that daily key level, rejected of that daily key level. Are you guys there with me? It rejected of that daily key level. But you will notice that it did not even give us, if you scale down to probably 4 hours, you're going to notice that you're going to notice that it did not give us a breakout. Okay, so let's look at this here. This is another key level here. Okay, and that's where price is about to get to. This is the level price is about to get to. Now let's play forward. Price gets to that key level also. It doesn't have the key level yet. This is another key level. This is what? A support on resistance. This is an SBR. Beautiful. So price what? Gets to my key level. It hasn't gotten to the key level yet. Good. This was the first touch of that key level. And then you can see that daily what? Rejected daily. Okay, confirming that this key level is active. Then we need to wait for what? The second confirmation, which is what? A breakout. So let me cancel this because I don't have my plan for this trading VIP premium as at today. So I'm going to leave this. I can only scale back on the higher time frame. All right, so we have daily reject daily. Are you seeing that? Good. Once I see daily reject daily of this my what key level, I will scale down to what my 4 hour time frame because I'm working with the daily time frame. I scale down to one time frame. After scaling down to one time frame, sorry guys, my network is a little bit bad. After scaling down to one time frame, I want to see a breakout. I want to see what? A breakout. Now, what is that breakout, guys? You can see that this was the candle that tapped the key level. So this was what? The low that was created before price tapped this key level. So I'm waiting for price to take out this low, and then my breakout is confirmed, or my market structure shift is what? Confirmed. So I can use here, you can either use breakout or market structure shift. Let me use market structure shift, anyone you want to use. Okay, so this is my breakout, this is my market structure shift. Okay, not probably, I'll show you an example where you have price tapping that low twice. Okay, so this we had a breakout. Look at this one here. Look at this one here. We had a breakout, right? This was the breakout here. And after that breakout, you can see that there were possible sell opportunities before price still reacted off that zone. Okay, and that was because I'm very sure there was another key level here that price used to push itself to the upside. Okay, but you can see this one here. After price was tapped this key level, price rejected and created what? A breakout. The moment price does this, we continue to look for sales till we get to what? Another key level. So you notice that I continue to look for sales. Let's see how many days we looked out for sales. So for this one here, you can see this candle broke out of this key level here. So this key level is going to become what? A resistance for it. So this is another fresh key level. This level now is no longer fresh, sorry. This is an unfresh key level. So expect price to disrespect it. The next key level that was fresh was this what? Was this resistance that turned into what? Support. So this was the key level. And you can see how price came back to that key level. And after coming back to that key level, gave me another buy opportunity. And when price got to this level here, where did price react from? Price reacted from this QM. Reacted from this QM and gave me another sell. And where did this price react from again? This price reacted from what? This V-shaped key level here. And gave me some buys. Where did this buy react to? It reacted to this A-shaped key level here. And gave me my sell to the downside. Are you seeing the way price is moving from one key level to another key level? So when I saw that, oh, I've confirmed that I should be looking out for what? More of sales. You don't see me wasting time. If I scale to my lower time frame, you start to see me take sales, 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 sales. You start to see me take out what? Sales, 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 till I get to what? This key level here. Let's look at how many days it took for us to get to that level. You can see that from this point here, after the breakout, we already start to look for opportunity. This is the first candle. So if you look at the measurement here, down to this key level here, you see that it took about 12 days. 12 days in total, which is approximately, let's say, almost 2 weeks, a week and some days. So I would have just been looking for buys for a week and some days. That is just to give me my clarity, a clear directional bias, what I should be looking out for. Instead of me coming every day trying to look for a buy, trying to look for a sell. No, I just continue to look for what sells, 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 sells till I get to my key level. Once I get to my key level here again, daily rejects daily. I scale to my 4 hours to look out for what? A 4 hour breakout. And once I confirm my 4 hour breakout, you can see this here, I confirm my what? 4 hour breakout. Beautiful. I continue to look for what? Buys, 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 buys till I get back to this key level. Then I confirm another 4 hour breakout here. And then I continue to look for what? Sells, 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 sells down. Okay, so that's how you get your directional bias. Okay, now there's some certain mistakes or there's some certain concepts you see online which can also work. But for beginners, I don't advise you to do that. You see some people telling you that, oh, once daily rejects daily, go to a time frame, 2 time frames lower, and look for your what? Market structure shift or your breakout or your change of character. That can also work for you. But as an experienced trader, that is when you can use that. You see some people that after they see daily reject daily, they just scale down to 1 hour and work with that. Yes, it works. But on some certain scenarios, you're going to notice that it doesn't really hold that much. You tend to get faked out or get a fake market structure shift unless you align your structure with the 4 hours. You can see that this structure here I marked as what my market structure shift or my breakout is in line with what the 4 hours. So the 1 hour is in line with 4 hours. So unless 1 hour is in line with 4 hours, that is when you can use it, please, guys. Now look at this one here. This one did not touch this key level before making this market structure shift here. So this is not your breakout. This was the one that tapped the key level. This was the A shape that was created before price tapped this key level. So this level here will be my breakout. This level here will be my breakout. Some people can mark here as a breakout. It's fine as long as this price has tapped this level here before this level. If that this one tapped here and then probably created another A-shaped key level again and tapped for the second time, please do not use it. Okay, please do not use it. So same thing here, same thing for this. Okay, you can see this tapped. This was our A-shaped key level that moved to the upside. This was our breakout. So if you look at this on the daily time frame, you just notice that price moves from what one key level to another key level. Look at this here. Let's look at this one. Look at this one here. Look at this. It's an A-shaped key level price. Okay, sorry, I've marked that already. My network. Look at this. This is what's a V-shaped key level price tapped it, reacted from there, pushed back down. Where did this price react from? Obviously, there was an A-shaped key level here. I mean, a V-shaped key level here. This V-shaped key level was where this price reacted from and pushed to the upside. So where did this price now react from? We have this V-shaped key level. This is an RBS here. We can work with this, and then we can also work with this A-shaped key level here. Anyone you want to work with. This is an A-shaped key level where price reacted from to and dropped to the downside. Okay, so price dropped back to this level here where this is the V-shaped key level here. Was this one price used? No, it wasn't this one. It was this inner one here. All right, so there's a V-shaped key level here. Price taps reacted off it, right? Now, this is a very good example of what I'm talking about. Look at this, guys. This is a current chart example of what I'm talking about. So some people are going to say, oh, price tapped here, made a move to the upside and tapped here again. Then you will now go and mark here as your breakout. You're wrong, okay? Because price has already tapped this level before price created this high. This level here is your breakout. This high here is where your breakout is. So you can see gold just created its breakout confirmation for more what buys. Are you there with me? And then another essential thing you need to see here is that price is already reacting off a key level. So there might be high chance that this buy might not hold because we already have a key level here where price is reacting from. So I hope you understand that. Okay. So I'm going to be giving us more examples later in the future. I want you guys to watch this video over and over and over again for you to understand key levels, understand your directional bias or your storyline in Malaysian SNR. So it's as clear as this. So you notice that, oh, for this certain amount of days, I am looking for buys. For this certain amount of days, you can see this is day 1, day 2, day 3, day 4. For 4 days here, I'll just be looking for buys till I get to this key level. Look at this one here. This is day 1, day 2, day 3, day 4, day 5, day 6. You can see for 6 days, I just kept on looking for what sell opportunities. Okay, so I hope you understand this and it's clear. I'll be dropping more videos very soon on how we can trade Malaysian SNR using structured liquidity and POI, and how we can just purely trade Malaysian SNR, you're going to see my entry, what I'm looking for, my exits, my take profits, my stop loss level, and everything you need to know on how to trade this properly. All right, guys, thank you so much. I hope this video was helpful. If you've been watching my videos like this and you enjoyed or you got one or two educative concepts from this video, please click on the like button, click on the subscribe button, and then you're definitely going to be seeing more videos like this. Thank you so much. Have a wonderful day.